Crypto futures products have flooded the market. So in this video, we will find out the taxation behind it and some ways you can save on taxes. Alright, so for those of you guys, who are not familiar with crypto futures, let's first find out, what a futures contract is. So essentially, futures contract is an agreement between the buyer and seller to buy a certain amount of crypto at a future date at a price that you agreed upon today. So you can get into futures and you can be like, you can go long on futures, you can go short on futures. So for example, if you go long on futures, you're speculating the underlying asset's going to go up in value. If you go short in futures, you are speculating the underlying asset's going to go down in value. Now, when it comes to taxes, whether the futures contract is regulated or not matters a lot, because the taxation for regulated futures contract and unregulated futures contract differ vastly. Right now, if you look at exchanges like Binance, Bittrex, BitMEX, most of these futures contracts are considered to be unregulated. What that means is it's not regulated by a regulator like CFTC. So in that case, when you trade this futures contract, you have a profit or loss based on your entry price and the exit price, and then the difference is taxed as a regular capital gain, just like when you hold cryptocurrencies. So let's say, for example, you got into a futures contract today, and then you closed or settled your position within 12 months, let's say next week. The P&L, the profit and loss, that's going to be taxed as short-term capital gains. And it could be long-term if you leave the contract open for more than 12 months and then you close it. So again, if you're dealing with unregulated futures contract, the taxation is very similar to dealing with regular cryptocurrencies. The P&L number is pretty much the amount that you had to pay taxes on. Now, switching the topics to regulated futures. Now, the regulated futures, there's few right now in the markets, and they have a favorable tax treatment. So these things, they fall under the IRS section called 1256. I'll show you the code section very briefly. So what this means is that if you're dealing with regulated crypto futures contract, no matter how long you keep it, every time the 60% of the gains are taxed as long-term capital gains and 40% of the profits are taxed as short-term capital gains. So what this means is this is a very beneficial code section, especially for day traders. I mean, imagine you can open up a position and close a position within a matter of seconds or hours and make a huge profit. And 60%, the majority of that profit will be taxed as short-term capital gains, which has lower, more favorable tax rates for you. So when you compare the regulated futures contract with the unregulated one, when it comes to taxes, regulated crypto futures contract are very, very beneficial, especially for day traders. Alright guys, hope you found this video helpful and beneficial when filing your taxes. I'll see you at the next one.